Hi everyone and welcome to Rock Report. I will be your host from now on. My name is Lucian and some of you know me from my Triangle Investor platform. I am here to help friends at Rock Report and contribute to their amazing work dedicated to delivering in-depth exploration news, mining visuals, and cutting-edge data analysis designed for geologists, researchers, investors, and industry professionals. We will bring you known guests from the commodity and investing world and cover companies, and we will do that by asking the right and direct questions to their CEOs. That said, I have a great guest today. He is my personal friend, somebody that I really, really respect, Mr. Jesse Day from Commodity Culture. Welcome to this show, my show.
Yes, happy to be here. Very excited for this new initiative with the Rock Report and hope I can contribute some value.
You will definitely, you are big value if you ask me and your show. But Jesse, before we start, I know a lot about you. We are close friends, but I'm not sure that everybody knows. 2-minute introduction. Who is Jesse Day?
Yeah, I'm the host of Commodity Culture. It's a YouTube channel that covers investing in commodities and natural resources. I also create documentary content on commodities. I've done documentaries on uranium, coal, oil, gold, silver, etc. I work pretty closely with Sprott Asset Management in both licensing my documentaries to them and also creating original educational content for them to help promote their suite of ETF products. So most of my video content lives on the Sprott ETF's website there. I'm also a contributor to ETFcentral.com. And I just got a passion for commodities and sound money in the form of gold and silver.
Excellent, and we will talk commodities, gold, silver, uranium, and more. Jesse, I invited you today to talk exactly that, and your favorite stocks. But before we do that, I would like to hear your angle as a person who hosts a lot of known names from the commodity world. Are you taking the advantage of those numerous stocks to position your portfolio? Are they influencing your investment mindset?
Yeah, they absolutely do. Not in such a direct way, in more of I speak to so many different people with so many different opinions, some of them very often conflicting. You know, one week I could have somebody on the show who gives one opinion, then the next week somebody else completely contradicts that opinion. Yeah. So by taking the opinions of so many different people and condensing them, and then doing my own research as well, I see it as like a piece of my due diligence, not the whole part, but maybe a 10 to 20% of my due diligence is in keeping in mind what all of my guests are saying. It's interesting because in this industry, as you know, everybody's got something to sell. So you also have to keep that in mind. What the perspective the guest is coming from, do they have a product or service that they're selling that is connected to their potentially bullish stance or bearish stance? So these are all things to take into consideration and form my own opinion. So it's a great way of sounding off because I can also come up with my own questions. That's a huge advantage of being in an interview role like us, right? So when I'm talking to somebody, I'm able to look into their background and then ask questions related to my own investment portfolio. You know, I'm asking a lot of questions about the energy sector, the oil and gas sector these days because it's been taking such a massive beating and it's a sector that I have a great interest in and that about 25% of my portfolio is invested in oil and gas equities. So whenever I get the chance to get somebody on who has experience in that sector, I can then ask them specific questions about the sector and kind of get a better bearing on if I'm on the wrong or right track with my own portfolio. So in that sense, it's extraordinarily helpful.
I couldn't agree more. Like you said, you hear a lot of opposite opinions from variety of your guests, but what are some common things about among majority of them in terms of market heading, inflation, geopolitics, gold, or other topics? There must be some common thing that they say that they think about the heading of the market, etc.
I think the consensus is bullishness on the gold sector. Even a lot of people I speak to who aren't bullish on commodities as a whole are bullish on gold. I think that's a theme that's emerged to the surface and that is undeniable at this point. And I've heard that from so many different people. I think that we're just in the beginning stages of this gold bull market, as crazy as that may seem, as we continue to hit nominal all-time highs. there's just so many factors working in gold's favor right now. It's interesting because gold, silver, and silver equities and physical gold and silver, along with Bitcoin, actually, are the only things that are keeping my portfolio in the green, because the rest of it is oil and gas equities and uranium stocks. We know that both of those sectors have taken a massive beating recently. Yeah. And so I positioned myself into, I've been buying gold for a while, physical, but I positioned myself in the equities about a year and a half back when I started to see that trajectory, like, okay, this is becoming undeniable that gold is going to be an asset that's going to rise in value over the coming years. And so taking that pivot, realizing at that time that most of my portfolio was uranium and oil and gas and that I needed to diversify, and gold being a commodity but having such a unique role as a monetary asset. It's a commodity that's not actually used in industry. Outside of a very small percentage of gold demand comes from industrial demand. So being able to see that, and so it's a play in the commodities space that is actually not so correlated with the broader commodities complex. And whereas with commodities such as oil, copper, silver, these are all things that can take a hit and become under stress when it comes to the economy. If we're looking at a potential recession, we're looking at lower demand for industrial commodities, gold can actually play the opposite role at that point. That's the exact scenario where gold tends to outperform in its role as a safe haven asset. So that's something that I was actually able to take away, to realize that, wow, most of my guests have conflicting opinions on different things, but it seems like everybody's consensus is that gold is in a very bullish setup right now. And so that's the one thing that I would point to. And I see gold continuing to outperform up ahead.
Yeah, how are your views on I didn't brought you here as a geopolitical expert or something, but I want to hear your take. How are you viewing the current geopolitical mess, and especially President Trump's presidency in this short period? How would you qualify it?
Yeah, I think he's a little bit out of his league at this point with this whole Liberation Day tariff fiasco. It's interesting because, once again, speaking to a wide variety of people, I have people who are all the way on the side of Trump is playing 4D chess and he knows exactly what he's doing. Somebody like a Tom Luongo would say that. And then you have people on the other side of the spectrum who say he's falling apart. His cabinet has no idea about basic economic principles, and that's something that somebody like Alistair MacLeod would point out. I personally think, the truth usually lies in the middle. I think the intentions from the Trump administration are in the right place, to bring more industrial production back to the United States, to stop importing so many cheap goods made with cheap labor in China and bring that economic production and that productivity and the subsequent growth to the United States. I think all of those are noble goals and they do make a lot of sense. But the problem with Trump is he cannot control his, bullying type of temperament. He has to always make himself look good. He always has to belittle others in the way that he communicates. And that's just not the way to do business when you're dealing with an international community. Maybe that works when you're running your own company and you have the upper hand. But when you're dealing with trade negotiations with countries around the world, particularly at a time when China dominates so much of international trade, so many countries are doing business with China. Now they've isolated China with these massive tariffs. And now China's come out and warned nations, hey, don't appease the Trump administration with these trade deals. And because China does so much business with these different nations, their word carries a lot of weight. And when you look at both of those sides, if I was just looking at it from a business perspective, who would I rather deal with, Xi Jinping and the CCP or the Trump administration? I'd way rather deal with the CCP because they're not out there making demands and talking tough and trying to bully people. They're just coming to the table with their terms and making deals with countries all around the world. And they have a very powerful economic engine, I believe, at this time in terms of their ability to produce so many different goods and services. I mean, China is no longer the land of cheap plastic toys and knickknacks and stuff like that, like it used to be viewed as not even that long ago. They're now producing cutting edge AI technology, robotics. They've got some of the greatest car manufacturing in the world. BYD producing these electric vehicles at like what, $15,000 you can buy one of these things. They're perfect for driving in smaller urban environments. They're just doing so much right. And yes, there's that consistent narrative out there that China's on the brink of economic collapse, you know, their whole real estate debacle and all of these things. Like I said, the truth usually lies in the middle. They're not about to collapse. They have a lot of strength, and you've got to realize how big of a country China is, both, you know, geographically, how massive the landmass is, and in terms of population. So people like to point to certain stories, oh, this particular factory is shutting down in this particular province. Well, that's a very tiny piece of the picture, but of course Western media will latch on to that and make that the headline. Oh, such and such factories are shutting down in Fujian province or something like that. But what about the bigger economic picture? And a lot of that data is opaque because, of course, the CCP does not necessarily want to play their cards where everybody can see them. They hold their cards close to their chest. So there's so much that's unknown. But I think in this particular trade war with the US and China, it risks becoming a US versus most of the world trade war because of how strong of a partner China is to so many different countries, you know, in Southeast Asia and all around the world, places like, you know, Indonesia, Malaysia, Vietnam, etc. So I think this is a very fascinating point in time. People have been talking about a potential monetary regime change. You know, there was a lot of talk about the BRICS adopting a gold-backed currency. Interestingly, I believe there's another BRICS meeting coming up in July, so that should be interesting to see what is or isn't announced there. They have been trying to circumvent the US dollar, but I think the real regime change in terms of the global economy is coming from where maybe a few years ago nobody expected it, which is inside the United States itself. I think that this fundamentally changes the global economy. I think, you know, we've seen Scott Bessent come out now, and he gave a speech recently where he started talking about cooperation between nations, and almost like he was trying to walk back this tough guy, spit in your face type of attitude that Trump had. Is it too little too late? I don't know. I talked to Louis Vincent Gave the other day from Gavical. He has offices in Hong Kong. He spends a ton of time in China. He writes extensively about China. And in his opinion, there's no turning back now, because as he put it, if you slap somebody in the face and basically call them a loser, how do you come back from that? How do you really walk that back? And if Trump is going to walk this back, because of the way that he operates, he's not going to be able to do it with a hat in hand, sort of, I'm so sorry, guys, I made a huge mistake. He can't, because it makes him look extraordinarily weak to his constituency, to the MAGA movement. And I don't think he's able to operate that way. I think it's impossible. I think he would see that as showing way too much weakness. So if this is going to be walked back, it has to be done in a way where at the end of the day, Trump is able to disguise it as a win. To either just outright lie and say, we made all the trade deals, all these countries came to us and it's all in favor of the US, and just make it up, which is, I think is totally possible. And then maybe the other countries will say, hey, we didn't make a trade deal, but the MAGA movement will ignore that. They're not going to read the articles about that, you know? And so I think that's one way perhaps he can try to reverse it, is go to these countries and have his delegates say, we're really sorry, we're actually going to walk back all these tariffs, and let's come to a trade deal that's a win-win. And then in the public sphere say, we came to a deal that's best for America. I think there's not a huge probability of that happening, and I think it could end up turning into a disaster. And then you got him trying to be involved in the Ukraine-Russia conflict, and meanwhile, while bombing the Houthis, potentially literally bombing civilians and killing them in Yemen, and instigating a potential war with Iran. I mean, it's a very interesting situation. One thing you can say is that at least he's doing something. If there is something to be said positively, I do think that his interventions in Russia, Ukraine have been very positive. It appears that he's trying to come to a realistic end to that conflict. So in that sense, I think it's been a positive. But then he turns around and instigates Iran and bombs the Houthis just as he's trying to negotiate a peace deal with Ukraine and Russia after calling himself, a peacetime president. So a lot of contradictions. It's a very fascinating time, that's for sure. And at the end of the day, all of this is going to be good for gold.
Agreed. I will withdraw my statement that you are not a geopolitical expert, because you gave a brilliant breakdown over here. Actually, some of my guests didn't give this kind of breakdown on my show. So great overview, like I said. How are you positioning your portfolio to this challenging time? How is your portfolio allocation looking? In the terms of commodities, what do you hold?
Well, before I get into commodities, my biggest asset is cash. I think right now is a time to have a decent amount of cash on the sidelines. I use 90-day treasury bills and just roll them over. Like, guys, there's nothing wrong with earning 4 to 4.5% on treasury bills short term. Everybody's chasing 10 baggers. Everybody's chasing 100 baggers. The vast majority of people doing that do not have the skill, ability, or time to be able to correctly identify which stocks could be a potential 10 or 100 bagger. Not only that, but even if you do, the mining business is tough. All sorts of unforeseen circumstances can happen. We've seen that in uranium extensively already. We've seen a lot of jurisdictional risk in a lot of different commodities. So I'll start by saying cash is my biggest position. But in terms of commodities, obviously gold is top of mind for me. So physical gold. In terms of the equities, I'm quite conservative because I feel like I don't have much of an edge when it comes to evaluating gold mining stocks. So I stick to the streaming. My biggest position is Wheaton Precious Metals. And then I have a position in the GDXJ ETF just to pick up on some of that higher beta compared to the gold price. I think that we are going to eventually see a mania in the gold stocks. That's been the biggest complaint of investors in the gold sector, is that the equities have not outperformed the metal to the extent that we would expect it to when we continuously are hitting all-time highs. I think we will see that capital rotation that everybody's talking about. We all are already starting to see the gold equities tick up, and so I want exposure to the more higher beta sector, the junior miners, and then I have that Wheaton Precious Metals as kind of the ballast, because streaming companies, you're not going to make your 10 bagger, but you could make your 2-3 bagger and take on almost no risk compared to buying individual mining stocks. Exactly. Because a company like Wheaton holds so many different streaming deals with so many different mines that if 1, 2, 3, 4, a dozen of them have issues, they've still got that income stream coming from the rest. They don't take on that jurisdictional risk, the regular risks that come with running a mining operation. So gold, absolutely. Uranium, obviously a story I very much believe in. My portfolio certainly reflects that. It's been hard times for uranium investors recently. If you pay attention to the day-to-day price movements, particularly, you can literally be down 5-6% one day and up 5-6% the next. So if you're on that ride, you kind of have to take yourself away from the screens. Or what I do is I just look at it for entertainment purposes. I know where I believe the uranium price is going over the long run, and that's another thing. People become fatigued out of this trade because when I started buying in 2020, the consensus was, well, in 4 or 5 years, you're going to be able to cash out. That was the consensus. If you listen to all these different people on social media, even a lot of the uranium experts, etc., this was a 4 to 5 year play. And so I think a lot of people piled in thinking, well, I'm going to retire early. I'm going to put my kid through college. I'm going to buy a house, right? And they pile into these uranium equities. A lot of them, the smaller explorers, thinking, well, if the Cameco's and the Kazatomproms go up, well, what'll a standard uranium do, or whatever, right?
Okay.
And then you end up in the position where we are today, where, Kazatomprom facing massive issues. I mean, all of these different companies are facing massive issues, which is a good thing for the long term of the uranium sector, because it's much more difficult to actually bring these development projects into production than people anticipated. I mean, look at what's happened with Global Atomic, the coup in Niger. Who else is having problems? Encore having problems. The list kind of goes on. Next Gen.
You're asking the wrong question. Who doesn't have the problem?
Yeah, exactly. And you look at like, okay, so what's the play here? My play is, once again, the vast majority of my capital in the uranium sector is in URNM, because why speculate? I do speculate outside of URNM. My biggest position is Energy Fuels in the US. I hold NextGen and I hold Denison, and that's it. But I always make sure that the heaviest weighted is the ETF, because again, you never know who's going to have issues, who's going to have problems, and they seem to come up everywhere. Just look at Canada. Like, Canada is considered by most people to be a safe jurisdiction, and it is in the sense that there's no AK-47 risk. You're not going to see coups, you're not going to see terrorist attacks, you're not going to see any of that sort of stuff going on. But what you do have is excessively long permit times, ridiculous hoops that you have to jump through for all the environmental regulations. You got to cut deals with 5 or 6 different indigenous tribes in the area and break them all off a piece. And so, like, and come to terms with them. They have to agree with this, and now you have to have meetings with them. And so it creates an environment where it takes a very long time to put these mines into production. So I do believe Denison Mines will be the next company in the Athabasca Basin to produce uranium. I believe that very strongly. I believe they're projecting 2027, 2028, first half of 2028, I believe. But I would take that and I would add 2 years to it, you know? And same thing with NextGen. I mean, NextGen's going to be a 2030 plus story. But I don't think that matters, because I think that once the market at large wakes up to the deficit and the supply-demand imbalance when it comes to uranium, and they realize the incentive price needed, I think that these companies, even if they're not producing anytime soon, will get re-rated based on the uranium they have in the ground. So I think that even though NextGen is a mess because they spend so much on G&A, they do really stupid stuff like sponsor Formula One racers. Like, they can't justify that. And I'll say it here, even though I do CEO interviews and I'd love to have NextGen come on my show and pay me for an interview. Lee Courier does not have a very good attitude at all when he's interviewed and asked about these issues. He gets this kind of look on his face. Maybe I'm misreading you, Lee. Don't attack me here, but it just feels like he's almost indignant when you bring up, why are you sponsoring an F1 racing team? Why are you sponsoring a hockey team? What are you doing? And he kind of dances around it and doesn't really directly answer, and kind of makes it look like, why would you even be asking that? So I don't think he's got a very good attitude about it. And I think they need to cut their G&A and they need to get more serious about that. But they've got the greatest undeveloped uranium deposit in the world. So what are you going to do? You know, like, I think I saw you talking to Rick about this, and he made the point that he's also, when I talked to him about this, he didn't hold back. He said it's despicable, it's disgusting. He used a bunch of really strong words about it, but he said, I'm a shareholder because the deposit is just that good. It will eventually get developed, or they will get bought out. And you kind of have to look at, the other thing I look at when it comes to a company like NextGen is I believe that institutional money will eventually enter the space in a bigger way. And when they do, where are they going to invest after Chemico and Kazatomprom? They're going to look at the next biggest market cap company, and that's NextGen. And they're going to look at all this info about how great the deposit is, how great the economics are, and they're going to buy NextGen. So I think it's going to be the benefit of institutional inflows eventually when we do get to that point in uranium. Finally, oil and gas is a sector that, again, I've been beaten up on. It's funny bringing up Louis Gave. He's also very bullish on the sector. When I was talking to him, he said it's been my cross to bear for this past time. Sometimes I wonder what I'm doing when I look at my portfolio. The oil and gas sector's taken a very big hit, particularly in the aftermath of these Trump tariffs. I think that the fundamentals for the oil and gas sector are there. Declining inventories, all of the big shale oil production is starting to roll over in all the big fields in the U.S. There's a lot of rumors / informed opinions that OPEC Plus does not have the spare capacity that many people believe. Gehring and Rosenzweig, one of the greatest research firms and funds in the commodities space, they write some incredible work. They believe that Saudi Arabia also has far less oil right now than people believe. They use all these AI models, very fascinating. I really recommend people check their work out. I think that oil and gas is going to bear fruit. I just think we're going to have to weather the storm here. And who knows when it's going to be, which brings up kind of my final point in this whole rant, is that when it comes to the commodities sector, nobody should be investing money, A, they can't afford to lose, and B, that they need at some time, some specific time in the future. If you want to do that, buy an index fund. But even now, I don't think buying an index fund at this point in time is good advice. The 60-40 portfolio, I don't think really is the thing to do now. But put it in T-bills, put it in something super low risk that you know is going to appreciate slowly if you need that money in the future. Because you never know how long it's going to take. These things always take longer to play out than you think they will. They always have more volatility than you think they will. So I think that's the case with oil and gas. I'll hold these equities for 10 years if I have to bear fruit. But I think oil and gas is going to do extraordinarily well in the future.
Yeah. Jesse, how is your due diligence looking? What are the most important metrics you consider when you do due diligence? What are the most important metrics that you consider for investing in one company? And on the other hand, what are the biggest red flags that keep you away from one company?
So in terms of due diligence, it really depends on the company. In the uranium sector, you can't do a lot of the traditional due diligence because the vast majority of companies aren't making any profit and aren't producing any uranium. So it's really, you can't really look at their financial statements you can't look at the traditional ratios to be able to come to any succinct conclusion. So I'll kind of separate uranium real quickly. And so with uranium, obviously you're looking at the economics of the project, whether that's through a feasibility study, which is obviously the best way, but if they have a pre-feasibility study, then that's fine as well. But at least you're going to be able to get an estimate of the costs and the profits. Like, this is why Denison looks so attractive. If you look at their Phoenix project, they've got an all-in cost, estimated cost of around US $16 a pound. They've got a 90% projected internal rate of return, which is absurd. So even if it doesn't end up being 90%, that's unheard of. Net present value 1.5 billion. So you look at these things, but of course you have to take them with a grain of salt because these are just assessments. These are just studies. This is not going to proven to be the case. If suddenly the cost of oil shoots up, their cost of mining goes up, and so many other variables. Are they going to be able to find the right people? Because in the uranium industry in particular, there's a real lack of qualified personnel. Not a lot of people these days have been studying anything to do with uranium or nuclear for that matter. So you can run into those sorts of issues. So again, these are all things that can be indications, but you have to look at these economic assessments and take a look and compare them with the other companies that have these. I don't get into any sort of exploration stage when it comes to any commodity. Uranium is in fact the only commodity where I look at companies in development that aren't producing, again, because there's almost none that are producing, and because I just believe the setup is so favorable that these companies, even if they don't produce once we really see the uranium market take off, they're going to be re-rated, in my opinion. So that's a big part of it. Obviously, you want to look at management. I have a bit of a different view than a lot of people on management. You know, a lot of people will say management's the most important. Mm-hmm. Most people who say that have the ability to call the CEO of the company. You know, a Rick Rule, name the person you talk to that says management's most important. Well, they can pick up the phone and call management. So of course management is most important for them. For your average retail investor out there, you have no ability. You can go to a conference and talk to the CEO. They already have their pre-planned responses to whatever retail investor is going to ask them. You can email their IR department. That's all you've got. You know, if they're a really small company, sometimes the CEO will just give out his phone number or his email. But at that point, you're looking at like a exploration stage without a discovery, or a very small company that's so much more difficult to determine if it's going to be successful or not. So I do think management is important. You want people who have experience at big companies like Cameco or Orano. You want people who've had previous success in developing uranium deposits and bringing them to production, who've played a significant role in that. So obviously you do need to look at management. So those would be the two main things I would say for uranium companies. And then of course understanding, is the deposit mineable? in an economic fashion. Because like with all commodities, uranium isn't particularly rare, but to find an economically viable deposit is much more difficult than people believe. And companies will often dress it up in their presentations and show we've got all this uranium at this incredibly high grade. But then if you dive deeper, you find the cost of mining this uranium, or the ability to actually do it practically, is not actually as they're presenting it. So you have to be very careful of stuff like that. And then when it comes to oil and gas, I obviously look at a lot of the traditional metrics. I look at how much debt the company has. I look at the traditional ratios, the price to earnings, price to sales, price to book, debt to equity, all of these types of things to get an idea where the company's at financially. And then I look at 10 years of financial statements. There's websites you can do this on. QuickFS is a really good one. FinViz you can also do, but that's only for US listed companies. But I want to see a 10-year record of all of the key financial metrics. And then generally speaking, with oil, it's different from, let's say, a growth stock in that you're not going to see consistent growth year to year, but at least I look for improvement over past performance in the long run. And I'm looking for share buybacks. I'm looking for companies that are buying back shares in the oil and gas sector, paying dividends. I think share buybacks are much more valuable than dividend payments, but it's nice to get paid to wait, particularly in the environment that we're in right now. So capital return to shareholders is something else that I look at. You want to look at the quality of their reserves, the recycle ratio of their reserves, so how easily they're able to replace reserves that they extract. And then you want to look at decline rates, so low decline rates over the life of the asset, so that there's plenty of oil in the ground for the long run. So those would be the main things I look at when it comes to oil and gas. There's a lot more, but I'm just trying to paraphrase it so I don't go on and on. And those are the two main commodities that I invest in when it comes to the equity side. For gold, I don't do a lot of due diligence because I don't understand the sector enough in terms of the mining part of it.
Okay.
And it's enough to try to understand uranium and oil and gas. And that's why I just buy the ETF and I buy some wheat and precious metals and I stack physical, and that's it.
Great. Jesse, final question. Who are the people that you respect the most out there? Whose opinion is most important to you? I know you had a lot of guests, like you said. They are all smart. They all have their niche. But if you can name a few that you really respect the most.
Well, that's tough. Hopefully none of my guests are watching this show. But Matthew Peipenberg comes to mind. He's not really a mining stock guy. He's more of a precious metal sound money guy. When it comes to the global economy and, the state of the world, even geopolitical matters, I just find him to be so level-headed. And I just always walk away with some new insights after talking to him. When it comes to the actual mining sector, I would say my number one guy is Lobo Tigre. He's the most level-headed.
Yes.
He tells it like it is, free of hyperbole. I remember the first time I saw an interview with him on Kitco back in the day, and I was just blown away. I was like, this guy's just free of, he's not hyping anything. He's telling it like he sees it. He puts an incredible amount of research into his work. We both have a friend here in Serbia, Vukasin, who's one of his mining analysts. And when you just sit down with Vukasin and talk to him about the work he does to analyze these different companies that end up being part of Lobo Tigre's service, it's incredible. So he's really good at finding the right people, and he goes to these sites and he visits them. And he just has you go away with so much information after talking to him. So I would say like broader geopolitics / global economy, Peipenberg. When it comes to the specific nitty gritty of evaluating mining equities, it's got to be Lobo Tigre. I could go on and on about so many more names, but just to keep it simple, I'll leave you with those two.
Okay, Jesse, where can people find you on social media, and where is your channel? Where can they find your channel?
Yeah, so on YouTube, just search Commodity Culture. That's the channel. You can also find me on Rumble. I just want to give a little plug for that because I do a new series called Banned on YouTube, where we talk about some controversial, totally non-investing topics. But there's some of my guests, people like Dave Collum, people like Tom Luongo, Alex Craner, who have a lot to say about controversial topics that aren't allowed on YouTube. So you can find me on Rumble, also Commodity Culture there. And then on Twitter, X, you can follow me at Jesse B. Day.
Jesse, thank you very much for coming to this show.
Thank you for inviting me. It was a blast.